What is a fair value gap and how could you use it to get some sniper entries on your trades? In this video, I'm going to go over just some basics on how to spot fair value gaps, and then I'm going to go over an example of how we could trade with the fair value gap. So let's get into it. So what is a fair value gap? It's a 3-bar candlestick pattern where we have a down candle, another down candle, and another down candle, or in the opposite, we could have 3 green candles, but what we're looking at is the wicks and the bodies. Now we see the wick from the first candle does not reach the wick of the third candle. That leaves a fair value gap and an imbalance in the market in between this zone, and this is where we would essentially be looking to enter for a short position on a retest if this is a bearish fair value gap, or to go long if we are going higher and we retest on a bullish fair value gap. So now let's get into it and I'll show you some examples on how we could trade the fair value gap. So for this example, I'm going to go over a real-time trade that I took that I also called out to our community at bullishbears.com, and it was a supply zone that I saw on crude oil. I said I'm going to keep an eye to see if sellers could step in. I would like to see a pretty strong sell-off from crude oil or at least some type of pullback. So as soon as we got weakness, this is the 1-minute chart on crude oil. What I was looking for is some type of confirmation. So once I got this lower high in supply, I started my trade, I started my position, put my stop loss at the previous high, and I waited to see if I had extra confirmation to add to my trade. Once I let the charts play out, we had a pretty strong move off of supply. Now, a lot of people who end up chasing don't really have a good area for their stop loss, so if the market pulls back, they end up stopping out and becoming more liquidity. Whereas people who are patient and notice, okay, we just created a 1-minute fair value gap off of this supply zone. This is going to work as a second entry. So that's exactly what I did. I put my limit order right at the start of this 1-minute fair value gap, and I do like to put my stop order a few points above the fair value gap just to play it safe, because a lot of people have their stops immediately at the top, and sometimes the market likes to wick the fair value gap before it continues. So I was playing it safe on this trade. This trade itself was about a 10-to-1, a 9-to-1. It turned into a 10-to-1 because I had that original entry. We're going to let it play out, and I'll show you exactly how we started to bounce, and then we also started to consolidate and grow tight and sort of create this trend line liquidity before we finally had our one last touch of this 1-minute fair value gap and finally had a nice strong push lower. Now again, this was a pretty good trade we took in our community. Check us out at bullishbears.com. We take all these types of trades. We have a live streamer every Monday through Friday in the mornings and also in the afternoons for Power Hour as well. Hit that like button, hit that subscribe button. I'll see you guys there. Take care and happy trading.